Good morning, everybody, and thank you very much for joining us today. So, Slav, do you mind going to the agenda slide? Is that all right? Okay, so I'm Mark Adams. I lead ASIC's Innovation Hub function, amongst other things, and say hello to you all. Welcome to this event. We tend to try to have 2 regulator meetups during any given year. In the first half of this year, I think some of us were involved in a regulator meetup hosted by FinTech Australia, so we didn't have one in the first half. So we've got today, and I'm really pleased that Apra and ACCC have joined us. But I'm not going to say much more just at this moment because I think I want to give the floor to Cathie Armour, Commissioner, to give us some opening comments. So over to you, Cathie.
Thanks, Mark, and good morning, everyone. And thank you so much for joining us at today's virtual regulator meetup, which is, of course, focusing on financial innovation. And as we log in from across Australia, I'd like to begin by acknowledging the traditional owners' ongoing connection to and custodianship of the lands on which we meet today, and to pay my respects to elders both past and present. Now, I hope everyone joining us is managing to stay safe and well. Let me begin by stressing how important each of these types of engagements are for us at ASIC in assisting us with our ongoing work, reaching out to the innovation sector. Each forum and meetup is a touchstone for us on identifying what we should focus on in the coming months. They also provide us with vital insights and a deeper understanding of the change and growth across the innovation sectors. And I think this is abundantly clear this morning from the updates you'll hear from ASIC, Apra and the ACCC. Just as examples, ASIC's Innovation Hub's ongoing information sharing and information assistance initiatives, the Enhanced Regulatory Sandbox, the consultation paper on which we call CP343, which relates to exchange traded products over crypto assets. All of that sort of work is driven and shaped by our ongoing discussions with you. And so thought-provoking sessions like these are why we find value in conducting these engagements. By bringing industry leaders, interested stakeholders together, it really lets us discover new avenues of explorations and to think about approaching barriers to participation in the financial sector in some novel ways. So it really is important to us to emphasise that these forums are inherently collaborative. So we really do encourage you to submit questions through the Q&A chat function that Slav identified a little bit earlier. And as November is likely to host the final forum of this calendar year, we are really looking to hear about the most diverse case studies and experiences that people across the sector have and would like to share. And I am sure that our colleagues from our fellow regulators feel much the same way about these events. And I'd particularly like to thank Stephen Rutherford and Nick Palmer from Apra, as well as Paul Franklin and Kat Savelli from the ACCC for their support and for their presentations today. So to close, I just want to acknowledge that we're all living through a time where much perseverance is required, particularly with the pandemic and lockdowns. I know that we at ASIC are really impressed about our collective ability to work through these difficult times. And I'm really looking forward to the continued discussions that we're going to have today and into the future. Just wanted to emphasise, of course, that the value of all these discussions is really exemplified when we are doing so with the positive consumer outcomes and market integrity in mind as our, if you like, as our collective objective with all the new innovation that's been proposed. So with that, I'll hand over to Mark Adams.
Thank you very much, Cathie, and thanks for that welcome and introduction to today's session. Much appreciated. So, Slav, I'm not sure whether I can see the slides, but if you could take me, please, maybe to the topic slide that I was going to cover. And I'll just remind people as we get into this that the agenda is, I think there's 3 spots from ASIC, Apra and ACCC. We're all going to touch on items of the day and try to keep to roughly around 15 minutes each, so we can all have about 30 minutes together for Q&A for the last part of the event. So this gives you an idea of the kind of things I'm going to briefly discuss, a range of things just to highlight engagement with ASIC on a number of topics like the hub licensing and the sandbox, and some pointers and tips for you, and just a bit of a brief update on that consultation paper on crypto asset ETPs and so on. So they're the things I'm planning to cover. So Slav, if I could have the next slide. And just as Cathie emphasised at the outset, this slide really just sort of brings home why do we care about financial innovation? And innovation's always been around. So, you know, I always think about greater data storage, computing power, advanced analytics, and distributed ledger technologies, to name components of what makes this really a very interesting time. And I think ASIC early on saw, you know, great potential for products and services from the use of all those applications to benefit financial consumers and market participants. So our objective with the Innovation Hub and our approach to it is to promote the provision of fair and professional financial services and markets in a digital environment. You know, it's a balancing act, so we balance our approach with considering the potential risks to consumers and to market integrity as well. So that's a bit of a reminder about what is the rationale to how we approach our Innovation Hub. So if we could have the next slides, thanks, Slav. And so I'm going to spend just a few slides just reminding people about the function of the Innovation Hub and remind people about the opportunity to seek informal assistance. So against the backdrop I just mentioned, we formed a function in 2015 for engagement in the provision of assistance to fintech and regtech startups and scale-ups. There are other aspects of the Innovation Hub, which I'll touch on in due course, but I think the thing I'm really wanting to highlight here is that a major component is ASIC's willingness to provide informal assistance from senior staff to those innovative businesses to help them navigate the regulatory system. And we call that our informal assistance function. We have a small core team of around 3 people who help coordinate inquiries and arrangements, and we have a network internally with all our business units to supply senior staff for the provision of that informal assistance. And so it has benefits both for those startups, and we get quite a lot of positive feedback. I'm not going to suggest everyone is thrilled. They always perhaps would like more or to better understand the circumstances, but it is a bit of a free assistance with some pointers. And we also get a better understanding about developments and issues that are on businesses' minds at any point in time. So I really do encourage you to go to the ASIC webpage, look for Innovation Hub, and if you are interested in seeking informal assistance, there is a simple way of doing that. And if I could go to the next slide, Slav, and just highlight aspects of that. Now, I don't want to sound like a broken record here, but it really does help us if you do take the time, if you're seeking informal assistance, to use the guidance that's in a form on our webpage to provide us some information about who and what you are, what is innovative about your business model, how might it benefit consumers or financial markets, to what degree have you considered regulatory issues and what you think they may mean for you. All those things and some brief input on that helps us find the right people to meet with you. And I think that's why I want to emphasize it for you in terms of reaching out and seeking informal assistance with us. So take that time out, make use of what information you already got. It really aids that process of providing informal assistance. So if I could have the next slide, please, Slav. And since March 2015, this gives you an idea of just how many engagements ASIC has had. That's sizable numbers, and it tends to be at any point in time, putting aside holiday periods. What is a holiday just at the moment? It's all blurred into one thing. But nevertheless, we tend to have 2 to 3 to 4 informal assistance meetings per week or thereabouts, depending on the circumstances. And that has remained fairly consistent, although there's been some downward trend to that, but fairly consistent right through all the COVID impacted period as well. And as you can see from this, we've engaged with a whole range of business models, so it's across the spectrum. If I could have the next slide, please, Slav. I want to move from how ASIC provides informal assistance to fintech and regtech scale-ups and just touch on licensing. So it may be that you as a business wish to operate with a license. There are other potential options. It may be some of you are able to operate where a license is not required, whether they're by the law or there is an exemption that applies. And typical examples are lending to small business, low-value non-cash payment facilities, just to name a couple. But some of you may also be operating as authorised representatives of a licensee, and many of you have entered the market that way, and it may be that some of you are thinking about that in terms of entering the market. But then again, you may wish your own licence, and I just wanted to touch on that in a few slides now on behalf of the licensing team. So if you don't know, ASIC just go back a second, please, Slav. ASIC does have a dedicated licensing team, and these figures here indicate to you that there is a sizable number of applications in any particular year, and it has been a particularly busy year for a number of reasons. New kinds of licenses have been introduced, and so ASIC is dealing with a large number of applications. And I'll point out in statistics later on that only a small proportion of those we are identifying as being fintech or innovative business applications. So I'll give those numbers later on. So that's just the giving a slight context of the licensing function. If we move to the next slide, please, Slav. So if you are an innovative business, I think this slide, I just wanted to highlight some things for you. The first thing is I'd be really urging you to approach the Innovation Hub and seek informal assistance before preparing for and making a license application. We've been tracking how many entities do that before making a license application for some years, and the short story is that those who do approach us tend to have a more efficient process with seeking their license, and I think that's probably down to the fact that they've got a better attuned license application through the benefit of having informal assistance conversations. So that's probably point number one. The second point is that there is plenty of guidance on ASIC's webpage, but I think we make reference here to some pertinent ones around the licensing kit and an information sheet about licensing. I do think they are really essential for an applicant to look at and be on top of what is needed from you in making a license application. And then on the right-hand side of this slide are a few topics that are really relevant for almost any license applicant, but also highly relevant for financial services, fintech-like licenses. We really do need you in that application to be clear about your business model. Try to map out how your interaction with consumers or market participants and how the transaction flow may work in the provision of your service. Then to think carefully about what kind of authorization you might need and why. Not everyone can get that's perfect for people, but I think if you could do your best effort on that, because that's really important to a number of things you then need to provide us, including evidence about your key personnel, your responsible managers and their competency. There are additional guides on that, but depending on what you want to do, really impacts what you need to have your responsible managers demonstrate in terms of their skills and experience. And it varies. So if it is a financial advice business model, there's going to be not only skills and experience around the provision of advice, but also personal competencies for some, meeting the advice minimum training requirements we have for personal advisors. That's an example. So there's a lot of flexibility in the way that people can meet the skills and experience, but that is one of the key areas which sometimes fintech applications struggle a little by not being totally on top of what they may need to demonstrate. Then many of you may have outsourced service functions, and then making use of cloud and other sort of services generally is an important part of fintech. So please identify where you outsource your functions and how you've got monitoring of that in place. And that relates to some of the general obligations you'll need to meet as a licensee, which include risk management, conflicts, and training. Again, the applications require you to just spell out a little how you're planning to meet that when you commence your license and on an ongoing basis. So I wanted to just highlight all those aspects to you as really being important for you to take time out to be as prepared as you can be in making your application before putting it in. So Slav, if I could have the next slide, please. So the process is that once you put it in through the e-licensing portal, which is definitely our preferred way of receiving it, and the payment's been made, we check the materials, that they are all complete, and there's normally a combination of probity checks and then the information that you've provided us. There may be a bit of back and forth in terms of seeking additional information, and it normally leads to a decision whether to grant or refuse a license, and often a draft license is provided to those that a license will be proposed to be granted to. So that's the sort of process. If I could have the next slide, please, Slav. And here are those statistics I was referring to earlier. So you can see in the left-hand side, the middle side, the financial services license and credit license statistics, large numbers. And that's a regular factor in the way that ASIC interacts with applicants. So on the right-hand side, I think, I'm not trying to demean these numbers. I think these are seriously good numbers for an Australian marketplace. You know, around over 80 entities since 2015 have sought new licenses to operate fintech or business models. So, and there's 10 in the pipeline at the moment. It is true to say that I think in the last year or so, it really has dropped off to a very small number of new applications. And there's probably lots of reasons for those. But there has been a healthy stream of applications prior to that. And as I say, there's 10 in place now. Slav, if I could have the next slide, please. And I just wanted to quickly touch on timing for a license. This is a regular comment and point that people make. And I understand, and I think we understand, that many are keen to get their license as quickly as possible. So ASIC has a service charter for dealing with license applications. And this slide gives you an idea about what we say is our service charter. And we've benchmarked that service charter against major overseas regulators, and we think we stand up pretty well in that the service charter that we provide. Now, depending on the complexity of the application and the nature of it, that will greatly impact the time taken. And fintech applications quite often do fall within that category. So that is a force for perhaps longer time periods taken for dealing with license applications. But if I take you to the bullet point down below, I think a couple of things in it. It sort of highlights what the current average is for making a decision on a license, and in comparing those for where we've provided informal assistance to those which haven't. As I said earlier, there's an efficiency dividend. So those time periods are within the sort of service charter figures that we put out. So just wanted to walk through that and give you all, as I suppose, as much an understanding of where we stand against that service charter. These are averages, of course, so clearly there will be some that are faster than this, and there will be those that are at the longer end of taking time to receive a decision on their license application. So Slab, if I could move on, and I want to quickly just dwell on the sandbox just for a few slides. Now, another option for an innovative business that's thinking about starting up and wanting to deal with consumers is, it's too early for me to seek a license. Could I test my business model? Is there an opportunity to make use of the Enhanced Sandbox? And that could be an option for you. I'm not planning to go through the technical details of the Enhanced Sandbox in today's session, but one, to just point out it exists. What is it? In a nutshell, it is a form of a licensing exemption for certain limited intermediary activities, which could be simple investment advice, dealing or arranging in relation to insurance, and the provision of certain kinds of credit contracts, for example. And they're normally subject to an overall cap of $5 million. So it is a limited licensing exemption. And if I could have the next slide, please. There is a process for applying or notifying ASIC about your intent to make use of the sandbox. And a couple of things to just point out here. There's a time period of around 30 days within which ASIC needs to make a call about whether or not the application meets the requirements to meet the sandbox requirements. So let's assume you're eligible to use the sandbox. We do a fit and proper check. We look at what you are required to provide us by way of information about two important tests. On what basis is your innovative business beneficial to consumers or to markets? And how are risks mitigated in the provision of that service? So that's the net public benefit test. And then there is an innovative test. What's special about your business? How does it compare with existing businesses in the marketplace? Why do you suggest your business model is innovative? Then there are other requirements that you need to indicate to us that you will be or you are a member of AFCA, or that you will have or you have in place compensation arrangements such as professional indemnity requirements. So you need to put together that application to us, and we make that assessment very quickly, as I said. If I could point to the next slide, Slav. So this will give you a bit of an idea. So to date, since the sandbox was in place since early September last year, there are 6 entities that are making use of it and are on our public register or public listing on our Innovation Hub web pages. Now, this will indicate to you that there's been about 18 or so that have been not accepted. The great bulk of those is because they were ineligible or incomplete. So another thing I probably want to emphasise for entities that are interested with the sandbox option is, again, knock on the door of ASIC and approach us through the Innovation Hub for an informal assistance conversation. I think that will greatly alleviate perhaps people making applications where their intended business model just is not within the exemption contemplated of the sandbox, or that they miss giving us some important information so that it's complete. So that's probably what I wanted to highlight on this slide. There are certainly lots of inquiries that we continue to get, and there's one application under assessment at the moment. If I could move to the next slide, please, Slav. So this is just an advertisement. There's plenty of information on the ASIC webpage about the sandbox, including a fairly simple information graphic to get into us. So if you're interested, I really urge you to look at that first and consider informal assistance with ASIC. So the last minute or two I just plan to take is just to give you an idea about where is ASIC on its consideration of the feedback we've received on CP343, dealing with exchange-traded products and other products with underlying being crypto assets. So for those who may be less familiar about this, we put out in the middle of this year a consultation paper which proposed good practices both for market operators and issuers of these kind of products in relation to the operation of the market and or the products with these underlying crypto assets. And it touched on eligibility, custody, risk management, as part of the things that are good practices. Now, we are really grateful that we got quite a lot of submissions, and we thank people for those, and we're considering them at present, and we're working towards having a final position on this in the last quarter of this calendar year. Slav, if I could have the next slide. Thank you. Just 3 points I wanted to highlight. By and large, most people were sort of saying, yes, ASIC, get on with settling these good practices. They're generally in the right place. Let's have them in place so that we can all have movement on perhaps exchange-traded products and other forms of retail managed investment products with underlying being crypto assets. So we've heard that. We certainly had feedback on 2 issues where people are saying, please think about altering where you came from, ASIC. And so one of those is about what kind of underlying crypto assets should be eligible for products quoted on a market. Should it be limited to Bitcoin and Ether, or should it be able to be to a wider range of crypto assets? And we pointed to those ones because of the variety of OTC markets in relation to them, including futures markets in relation to those products overseas. And then another thing that people were saying to us was that in relation to the registration of managed investment schemes, which could include products unquoted, that ASIC consider a broad or flexibility about the range of underlying crypto assets that could be the subject of such products. So I just wanted to highlight that there were clearly some issues that people raised with us and that we are considering them. So that's enough from me at the moment. We'll move on to our other regulators, and the first up will be Apra, and Stephen Rutherford and Nick Palmer, and I'll give the floor to you. So thank you very much.
Thank you, Mark. Can everyone hear me okay? Yeah, great. So thank you to you and to ASIC for the invite to speak at the Financial Innovation Regulator meetup today. I'm Stephen Rutherford, Senior Manager in Apra's licensing team, and I'm going to cover an outline of Apra's updated approach to licensing new banks. If you could go to the next slide, Slab. Apra recently updated its approach to licensing new banks with a revised information paper and guidelines for new entrants published in August. Apra's updated approach includes both stronger requirements for applicants to meet in order to be granted a banking license, and following a license, closer supervision of new entrants as they build their business and transition to an established bank. The approach is designed to encourage sustainable competition by ensuring that new entrants are better equipped to succeed. Apra recognises the value that new entrants bring to the banking industry, including through innovation, and that new entrants to banking have a different risk profile compared to established banks. As a result, Apra's approach seeks to balance supporting competition and the ability of new entrants to build a sustainable business with ensuring financial stability and protecting depositors, in line with Apra's mandate, to protect the Australian community within a stable, efficient and competitive financial system. 3 key features of Apra's updated approach to licensing new banks are highlighted on the slide. Firstly, an increased focus on a new entrant's contingency plan to respond to financial stress, including options for the new entrant to exit banking business in an orderly way and while protecting depositors. Secondly, a requirement for applicants to achieve a limited launch of products before being granted a banking license. This is in order for applicants to demonstrate their operational readiness to launch and manage new products, which will be key to achieving a sustainable business after they receive a banking license. Thirdly, increased clarity on the regulatory capital requirements that Apra requires new entrants to meet to facilitate their transition to becoming an established bank over time, including meeting Apra's expectations of those established banks. The changes to Apra's approach to licensing new banks incorporate Apra's learnings since 2018, when we launched a way for new entrants to receive a restricted license ahead of transitioning to a normal banking license, known as the restricted ADI pathway. I'll explain what that is in the next slide. If you could move on, please, Slab. This slide sets out Apra's 2 licensing pathways for ADIs. ADI stands for Authorised Deposit Taking Institution, an entity that has an authorisation to conduct banking business, essentially a bank. Apra controls that authorisation through the grant of an ADI licence, and there are 2 pathways for applicants to seek an ADI licence from Apra: the direct pathway in the upper part of the diagram, and the restricted pathway in the lower part. You'll see that both pathways have the same start: pre-application discussions with Apra, which I'll say a little bit more about later, and lead to the same outcome on the right: an ADI licence operating as a new ADI and transitioning to an established ADI over time. These 2 pathways haven't changed with the recent update to Apra's approach to licensing new banks, What has changed is the application of APRA's prudential frameworks, including APRA's expectations of new entrants within each of the pathways. The direct pathway, across the top, is suitable for applicants that have existing resources and capabilities to establish an ADI and allows the applicant to conduct banking business as soon as a licence is granted. The applicant must demonstrate that it is able to meet APRA's prudential framework and that it is ready to commence banking business from the point that an ADI licence is granted in order to successfully apply for a licence. The restricted pathway, along the bottom, facilitates entry into banking business for a wider variety of applicants and is suitable for applicants that need time to develop the resources and capabilities to establish an ADI. The pathway allows applicants to conduct limited banking business as a restricted ADI, a separate class of ADIs, before meeting the requirements of APRA's prudential framework as a full ADI. A restricted ADI licence can assist applicants in seeking the investment required to operationalise their business and in testing their operational capabilities while they develop their compliance with APRA's full prudential framework. An important part of the restricted pathway is that entrants are expected to progress to an ADI licence within 2 years, or to exit banking business if they are not able to do so. This explains the importance of the first feature of APRA's updated approach that I mentioned, a contingency plan for the restricted ADI to carry out an exit from banking business if it is not able to progress to an ADI licence, and to do so in an orderly way while protecting depositors. That contingency plan is also important if the restricted ADI faces a financial stress. Contingency planning continues to be important after receipt of an ADI licence, and indeed for all ADIs, in order to increase their resilience, reduce the risk of failure, and protect the depositors. And APRA is expecting to bring out publication of a consultation on our expectations in this area later this year. The second feature of APRA's approach that I mentioned was for a limited launch of products before licence. In the restricted pathway, applicants must achieve a limited launch for both lending and deposit products while as a restricted ADI before they can be granted an ADI licence. In the direct pathway, applicants must achieve a limited launch of lending products before being granted an ADI licence. Launching new products is key to new entrants achieving sustainability, and a limited launch demonstrates their operational readiness and capabilities to do so before a full public launch after receipt of the ADI licence. Both pathways lead to the grant of an ADI licence and operation as a new ADI, as shown on the right. As a new ADI, the entrant will be subject to an adjusted prudential approach by APRA in order to support the building of a sustainable business. Over time, the new ADI will transition to an established ADI when it will be subject to APRA's normal prudential approach. The third feature of APRA's new approach I mentioned, the increased clarity of capital requirements at each stage of the pathway, is intended to facilitate that transition for new entrants to established ADI and meeting APRA's full prudential expectations. So that covers the two pathways to become an ADI and how they are affected by APRA's new approach. The next slide sets out how APRA's prudential framework changes at each phase on an entrant's journey to an established ADI. It's important to note this slide doesn't set out APRA's whole prudential framework. It would be a great slide if it did. Instead, it just highlights the key risk areas where the application of APRA's prudential framework has been adjusted at the restricted and new ADI phases, and compares APRA's approach to those risks under its normal prudential framework for established ADIs on the right-hand side. I'm not going to walk through all of this in detail or explain the technical concepts. The information paper and guidelines that I mentioned earlier unpack what APRA's prudential framework is and what the adjustments to it mean, and provide the detail that new applicants need to know. I'll just call out three things today. Firstly, that the application of APRA's prudential framework is simplest for restricted ADIs, followed by an increase in expectations for new ADIs and a full application of the framework for established ADIs. Secondly, the clarification of regulatory capital requirements, which is summarised in the slide, recognises the benefits of adjusting the approach for established entities, which is based on the risk profile of the entity's balance sheet, to a more flexible approach that allows for the simplicity of a minimum nominal requirement in dollar terms, or a greater focus on the risks the new entrants face from outflows of operational expenses during startup. Thirdly, as a new entrant progresses through the phases, APRA initially places controls and limits on their deposit taking, which are then relaxed at later phases. At the restricted ADI phase, there is a $2 million cap on the aggregate value of deposits. As deposit restrictions are relaxed in the new ADI and established ADI phases, there is a corresponding increase in APRA's expectations of the entrant's capital management, including building capital buffers to better withstand the stress, and of the entity's contingency planning, with an initial focus on a strategy to return deposits to customers. This transition is one of the ways Apra balances supporting competition and innovation with the ability of new entrants to develop and the ability of new entrants to develop a sustainable business with Apra's mandate to protect depositors in a safe and stable financial system. That summarises how Apra adjusts its framework at different phases of a new entrant's journey to established ADI. The last slide today covers Apra's licensing process and the expected timeline. This summarises the Apra process from pre-application through to formal application and to the application being deemed substantially complete, and the expected duration at each phase. There are distinct processes and definitions between Apra's processes and the ASIC processes Mark covered earlier, so please don't take these definitions as being the same. All prospective applicants should engage in pre-application discussions with Apra, and early discussions are beneficial for both parties. That's actually quite common with the ASIC approach that Mark laid out. During the pre-application phase, Apra can outline the licensing process and clarify requirements, and identify issues with a potential application, including whether a license is even required. Again, in common with ASIC, we sometimes see interest in applications where there's actually not a license required by the applicant. Apra can also provide feedback on an entity's readiness to apply for an ADI license before that application is submitted and the fee is paid. Potential applicants should be prepared to discuss their rationale for applying for an ADI license and their business proposition and strategy. The duration of the pre-application phase varies depending on the information provided by applicants and their readiness to apply. When an applicant is ready to apply, a formal application for a restricted ADI or ADI license consists of two components: the application submission and the application fee. As part of an application, applicants are responsible for demonstrating that they can meet the relevant prudential standards, including through their own self-assessment, that they have a sound risk culture, and that they have adequate financial and non-financial resources, including appropriately experienced staff. Apra's assessment of the application, including the applicant's capabilities and resources, is an iterative process, including meetings with the applicant's board and senior managers, a review of submitted material, requests for further material, and on-site review. A 12 to 18 month timeframe is typical between submission of a formal application and the application achieving a substantially complete level, depending on the readiness of the applicant and the complexity of the business. Once an applicant has demonstrated that it has sufficient financial and non-financial resources and the required application material has been submitted with sufficient quality and detail to allow Apra to complete its assessment, the application is substantially complete. From this point, Apra aims to provide a decision on a licensed application within 90 days. This is a high-level summary of the process, and indeed the other slides are high-level summaries of Apra's expectations of new entrants. The information paper and guidelines for new entrants that were published in August provide all the detail that new applicants need to know, and are available on Apra's website, along with further information and frequently asked questions. Thanks very much, everyone, for your time today, and be happy to discuss questions in the floor discussion. Just onto the thank you slide, Slav. I think I'm handing over to ACC now, or back to you, Mark.
Thank you, Stephen. I'll just interrupt for a quick moment to introduce our colleagues, and thank you for that really succinct and clear presentation on the new entrant regime that Apra's put in place. So consumer data right is never a dull space, so let's give the floor to the ACCC with Paul Franklin and Kat Savelli. Thank you very much.
Thank you for having us. So the consumer data right really exists because in a new data-rich economy that we have, the Productivity Commission first recognised that the value of a consumer's data needs to flow to the consumers, not just to the established businesses who hold that data. It's a right that will exist across the economy, starting with banking. By late next year, we expect it to start rolling out to the energy sector, and then to very likely telecommunications as the third sector beyond that. The ACCC's role in the consumer data right is both as a regulator and a service provider. As a regulator, we accredit data recipients, and we enforce the rules and standards. But we also, as a service provider, plan, design, build and run the technology solutions that allow connectivity between participants. And we support participants with testing and onboarding and a range of other services. I might move on to the next slide, and possibly the next slide after that. Thank you. And one more. Thank you. So, as I said, we deliver the enabling technology solutions. There's Kat will go through the details of what those solutions are. But our role is really to support all of the participants and make sure that the ecosystem works. And there's quite a lot of information available for prospective participants. If you have a banking license or you get one, then we have a streamlined accreditation process that's available for participants. It makes it very easy to carry that across into the consumer data right. Otherwise, we'll assess applications for accreditation that include checking that you're a fit and proper person, that you have adequate insurance, you're a member of an approved dispute resolution scheme, and that you have a secure technology environment. I might move on to the next slide and hand over to Kat for an overview of the technology solutions.
Thanks, Paul, and thanks, Mark, for having us. I'll give you a quick overview of the technology solutions that we have, and then a bit more of a focus on our participant tooling pilot that we have running. So you'll see in the diagram here that this is a diagram of the register and accreditation application platform that the ACCC and CDR is responsible for, and it provides the following. So it will facilitate the CDR registration and accreditation for new participants. It provides the technical mechanisms for data holders and accredited data recipients to establish their trust with the CDR and each other, and enables the registrar to manage the life cycle of the participants. So it collects metrics from data holders to keep a pulse on the ecosystem and provide data for compliance purposes. So if I can just move to the next slide, and possibly the one after that. Thanks, Love. So just to give you a quick overview of, I guess, why the pilot came about. So through most of the last year, the ACCC provided a lot of intensive support to a large number of participants in the banking sector who built and tested their solutions with testing support from us using our integration environment. And it's obviously become quite evident that this type of extensive resourcing is not possible long term. And we find that participants are asking for more information and tools to support that onboarding process and going through the testing phase. So since the initial testing phase, we've sort of noted that the standards alone have not been enough for participants to assess effort and build compliance solutions. And it's been more evident through a combination of the long list of exemption applications and longer than desired timeframes to go through the conformance test suite. So CDR really wants to encourage participants, and it's been sort of discussed at length with our committee on a number of occasions. So in response, we've got the participant education and tooling strategy, which was developed and outlined a number of initiatives that could assist participants during their development and potentially reduce costs and encourage more participation. To support one of these initiatives and encourage participants' contributions, the pilot was scoped from March to June in 2021 and made part of our continuous improvement group of projects. So you'll see here that this diagram shows an overview of the mock solutions, and it shows you the components of the mock solutions that currently consists of the following. So we've got the mock register, we've got the mock data holder, and also the mock data recipient. Can I just get you to move on to the next slide, please? And so this is just an overview diagram of the architecture. So the diagram below outlines the use of how we use the containers for each of the mock solutions. And each container includes the relevant technical components, so your APIs, your repository, and also the user interface. These components have been packaged into containers and made available as open source solutions, and that will allow the participants to to download the relevant containers for their specific needs and deploy solutions to an environment of their choice to run the containers and immediately begin interacting with the mock components. And just on to the next slide. And this is just a roadmap of the solutions that we would like to put forward. So in Q4, we're looking to release the open source mock solutions for the banking sector. So that will be the mock data recipient and the mock data holder. And then from 2022 onwards, we're looking to uplift the mock register to support the energy and any future sectors. And we'll have development of the mock data holder and data recipient for the energy sector. We have development of the mock data provider to support sector-specific requirements. And then we're looking at considering provisions of hosting a sandbox environment with deployed mock solutions to facilitate industry testing. And I'm going to hand back over to Paul, and he's going to just talk through our plans for the future.
Thank you. So there was a review of the future directions for the consumer data right conducted by Scott Farrell and released late last year. Treasury and the government are currently considering the government response from that. But what is very clear is there is a version 3 of the rules which we expect to be made shortly by the Minister that includes a range of measures to make it easier for fintechs in particular to participate in the consumer data right. It includes measures like tiered accreditation and the ability to pass on information to trusted advisors like mortgage brokers, accountants, financial counsellors. And then version 4 of the rules, which is the energy set of rules, is a more sector agnostic set. So there's a clear development pathway, and then plans for the government to continue rolling out sector by sector over a period of time. So while it's very early days in the development of the consumer data right, a lot of momentum's been built. We now have 50 active bank brands sharing their data, and we have 16 accredited data recipients, with more on the way very shortly. And where the banks that are active are continuing to make more and more products available. By November, that'll be extended to non-major banks sharing data for lending products, home loans, personal loans, investment loans, and mortgage offset accounts. And by the 1st of February next year, they'll finish the rollout to all of their products. So it's exciting times in consumer data right, with a lot to come. If you are interested in accreditation, I'd encourage you to look at cdr.gov.au, which has quite a lot of information available for prospective participants, and access to the portal through which you can apply for accreditation. I might just check if there's another slide next to come. So energy is, as I said, the next sector. Our expectation is that rollout to energy will begin with the larger energy retailers sharing data around October next year. Energy obviously has the benefit that it's been able to observe the rollout of banking. So there's a whole lot of operation of the ecosystem that's now well understood. We expect that the rollout to energy will be more efficient, and we're looking to automate the testing using more sophisticated tools than we had available at the beginning of the banking rollout. And time for questions, or back to you.
Thank you, Paul, and thank you, Kat. Thank you very much for that presentation. And there's always movement in the CDR world, so thank you for that update. Now I think the floor's open to questions across the board. I can see some questions have already come in. And so, yes, please use the WebEx function to be able to send in any questions, and we'll see how we go with that. Now, I can see some of the ones there, I think, are more directed to ASIC, so happy to sort of chaperone those and see whether others come on in. But the other regulators, by all means, just indicate if you would like to add a comment to any of these sort of queries. And I'm joined by some of my colleagues here from ASIC too, who I might just call upon to supplement, the brief answers I may try to give. So if I start with the first one, there's a question just, I think, about the statistics that we provided about the licensee numbers. And we'll have to come back to this question from Steve Modlin, which is, are the numbers for the fintech business models included within the overall AFSL ACL numbers? I think the short answer is yes, but I want to confirm that for you. So if we could just take that on notice. There's a question here about the payment system review undertaken by Treasury, and Scott Farrell was a party in that as well. And on this topic, I think the question's sort of been asking, was that a factor on licence applications? Personally, I don't know. It might have been. And might that be influencing perhaps people's thinking about whether to make a application for a license or, enter the payments sector? So I'm going to make one brief comment and then ask my colleague Richard McMahon, who's been involved in the payments area, to maybe make a supplemental comment. My quick comment is, if you are interested in a new payments-related business, and it may be relevant for both ASIC, Apra and RBA, let alone others like AUSTRAC, I would suggest just still knock on, if you don't know where, knock on ASIC's door. And the network is there. I think don't hold back if you are interested in a payments-related business, notwithstanding that there is potential for change in that environment. But Richard, did you want to add anything about the payments review and relationship to licensing and businesses?
Thanks, Mark. So I'd entirely agree with what you just said. I suppose, obviously, the recommendations of that review are now public, but in terms of what that means for regulatory requirements going forward, we are awaiting a government decision about whether to accept those recommendations or not, and if they do, what that will look like in practice. Some of Mr. Farrell's recommendations would involve some change, particularly changes to the obligations that might apply to firms that are regulated by ASIC, and that's not something that we can do on our own. So it's kind of very much over to government on that, and for the time being, the current laws apply, and the sort of current process in terms of applying for a license and being able to seek assistance before you do that from Mark and his team apply as well. So, yeah, that one's a bit of a wait and see at this stage.
Thanks, Richard, and I'll be coming back to you because that stablecoins comes up, so I'll be looking for your comments on that too. The next question is about an initiative run by the Department of Industry called the Business Research Innovation Initiative, and the query from Bruce Wren is really what's the status of the consideration of applications of RegTech businesses to perhaps receive grants under that process and work with ASIC on the problem that we put forward about listed company disclosure. Bruce, I think all I can really do is point you to the Department of Industry and to ask you to make your inquiries there. I think what I can say is that things are still moving along largely towards the timetable that I think that they made public through the process. So I think I'm not putting my foot in my mouth where I'm saying that things are working towards announcements being made in October or thereabouts. So that is my best understanding of the state of play and what I think I can say publicly at this stage. But by all means, do approach the department if you want to understand whether they can tell you anything more. Then I can see there's a couple of questions about stablecoins, and which is a big topic in itself. I suppose, again, I'm probably going to start with a similar approach and then ask whether, Richard, you wanted to make any additional comment. I suppose my starting proposition would be, again, that if there is a business out there interested in developing stablecoins and wanting to understand the context within which that may work under the regulatory framework that's current in Australia, again, I would say, please knock on ASIC's door, come via the Innovation Hub, and you'll be put in touch with the right people to discuss that. The answer is not a simple one because it really does depend on the nature and shape, I think, of what it is you might be proposing. So that's sort of the here and now. I'd be urging people to knock on our door. And again, Apra and RBA and others may well be interested parties in your potential business model and development. But there is also a process between the Council of Financial Regulators looking at the regulatory framework of stablecoins. And I'm just going to ask Richard to see whether he can say what he can publicly about that process.
Sure. And I suppose just to add to the first part of your answer, Mark, about businesses that are thinking about issuing a stablecoin or providing some kind of service relating to one or more stablecoins, some of the key things to think through at the moment are how the laws that ASIC has would apply to that particular coin. And that can be quite a difficult topic to grapple with because it is hard to like the things you need to consider and the answers that you might get at the end of that piece of consideration really do depend on the features of that coin and the rights and the obligations that someone that holds the coin will have. So our public guidance in Info 225 about initial coin offerings, although it's focused on ICOs, many of the kind of underlying sort of principles or pieces of commentary about when a crypto asset may or may not be a financial product that's within ASIC's remit are still really relevant. So that's a good place to look to in terms of initially getting up to speed. As Mark mentioned, there is a piece of work underway amongst the Council of Financial Regulators looking at issues relating to stablecoins. So that group of regulators is ASIC, Apra, the Reserve Bank of Australia, Commonwealth Treasury, and also AUSTRAC are involved in that piece of work as well. So that's something that's been going on for a number of months, and in addition to considering what the implications of kind of a significant stablecoin in Australia could be, there's also been a fair bit of work underway looking at some of the proposals being considered in other jurisdictions. Those who are interested in stablecoins may know that jurisdictions in Europe and in parts of Asia have either announced or consulted on different regimes that might apply to stablecoin issuers or people who take custody of stablecoins. So we've been closely monitoring those developments and assessing what they would mean. In terms of where to from here and timeframes and things like that, it is really a little bit difficult to say. It's depends on kind of a range of factors, I think, that are sort of many of which are outside the group's control, but it's very much an area of interest. Crypto is generally, but definitely stablecoins has been an area that the regulators have been thinking about. I suppose a final point to leave with is kind of similar to the Farrell review. If there is to be a change in the future to how stablecoins or related products and services might be regulated, that's going to be a matter for the government. So it may take a little while to work through.
So thanks, Richard. I'm going to take this opportunity again, just remind people, please put in a question if you're interested, and please consider any questions that you wish to direct to ACCC or Apra in relation to the topics they've raised, or perhaps something else in relation to the innovation space that you may want to highlight. So I can see there's a question that's come in around engaging with the Innovation Hub and and a query about, well, I've got something innovative, but it is a bit of it's also related to a traditional business model in terms of its distribution. So in itself, that question is raising a good question: what is innovative? And I think the short story is on knocking on our door and approaching us. I think ASIC is interested in engaging with businesses of all kinds if they're interested in chatting with us. So as I say, we've got a large network internally, and if business as usual means we interact with the businesses as well. So we won't get fixated about how innovative or not. If you're interested in approaching us, please do so. And if it's best dealt with the business team alone, we'll put you in touch with that business team. So hopefully that helps. There is a query here about, again, crypto assets and a specialist category for AFSL licensing. It's a query from Paul. If Paul is familiar with our consultation paper 343, it does propose potential subcategories for licensing purposes, and it's one of the things that we asked for feedback. That category is sometimes relevant for how we approach. It's not only just counting what kind of product providers there are of this kind, but it may also be relevant for competency or other licensing requirements that get tailored for particular kinds of entities based on our experience. So the short story is, I think, to that question, we have proposed an approach to that for certain kinds of products, and we're considering the feedback on that topic as to whether we should approach it that way or not. Okay, there's a query here from Lawrence. I'm just reading it now. Reciprocal obligations being imposed on data recipients of bank. Okay, I think this might be a query for the ACCC. Now, Paul, I can see you nodding. Have you been able to read that question, and are you willing to take on that question from Lawrence? You or Kat?
I can take that question. Are there prospects of reciprocal obligations being imposed on data recipients of banking data to share banking or other data that may be useful or relevant? So there are reciprocal data holder obligations, and they operate in two different ways. The first would be if you become if you're an ADI, a non-major ADI, for example, and you don't currently have an obligation to share certain product data sets, the phase 2 and phase 3 obligations that commence in November and February, those obligations are brought forward if you get accreditation. That's only a temporary issue. But if, for example, you're a non-bank lender and you're not currently obliged to share CDR data, by becoming accredited, you would attract reciprocal data holder obligations. So a non-bank lender that's able to collect CDR data from other lenders would then have to join the CDR as a data holder as well.
Press the mute. Thank you, Paul. Thanks for that. And Lawrence's reply to that is appreciates that answer. So here's a question about remittance providers and an AFSL license. And Richard, I may call upon you again to, maybe I will just pass to you, Richard, in terms of if I am a remittance provider, in what circumstances might I need an AFSL? And to the degree that maybe you're able to just say, okay, whether or not that's the case, Austrac's someone that you really should be in touch with as well. So, Richard, did you want to make any comments?
You just said the first thing I was going to say. Remittance businesses do always need to register with Austrac, so that should very much be something that should be on someone's radar if they're planning to enter that space. The threshold questions about whether a remittance business needs to be ASIC regulated or not, it depends on exactly the kind of service they're providing. So services that involve, say, funds being stored for some time, or kind of ongoing relationships with a consumer to kind of allow them to remit funds either on a repeated basis, so kind of a certain amount every month or every fortnight, or to kind of facilitate future transfers. Those are businesses that are looking to engage in that kind of conduct, more likely to need to be ASIC regulated and to either obtain their own license or, structure so that they're, potentially providing the service on behalf of someone else who has a license. On the other hand, businesses where it is perhaps more kind of a one-off, or sort of, you're providing money and instructions about where the remittance should go, and then it's sort of then processed by the firm. The more the service is limited to that kind of conduct, the less likely it is that they would need a license from us. There's an exemption in the regulations that means that kind of sort of one-off electronic funds transfer is not something you need an AFS license for.
Thank you, Richard. So again, if the query asker has any doubts about that, again, knock on our door and we'll do our best to try to assist you with your particular sort of circumstances. So that is it, I think, and in terms of the questions that I've seen. I think the answers we've given have covered some of the common questions. So maybe I'll just wait one last chance in case someone had any other queries to raise.
And Mark, there's one question that's been sent. I think it's just been sent to me.
Oh, you go ahead, Paul. Yep.
Which asks, have any government agencies applied to become accredited data recipients? Could you provide some examples of potential use cases? So I guess there's three possibilities. We haven't yet had an application, but we have had some useful discussions with government agencies. And there's three ways. It could be that there's data held by a government agency on behalf of a consumer, which they want to make available for consumers to share. CDR is always a consent-based data sharing regime. So every consent that's given to share data in CDR is a very specific consent for a specific data holder to share specific data for a purpose. And it's possible that data held by government agencies could be made available to do that. And similarly, there might be cases where government agencies find it useful to access data that's available through the consumer data right. A really simple use case which could be relevant to lots of government departments is when you're establishing a relationship with a new provider, confirming who owns a particular bank account is something that is relevant to preventing fraud. And some of our existing data recipients have indicated they'll be using CDR for that purpose. So there's just one really simple area where government agencies might want to verify the owner of a bank account before they start making payments. But there's a whole lot of different potential uses of CDR data. The third one that's very interesting is in, I guess, how CDR can use different ways of authenticating a consumer for the purpose of allowing the flow of data. And governments are important providers of identity services. So whether it's something like, MyGov ID that could be used for confirming a consumer's identity for sharing data, those sorts of things are interesting areas to explore as well. But so far, no applications have been received yet, but some interesting possibilities.
Well, thank you, Paul. Thanks for outlining or identifying the question and then outlining the art of the possible and potential in that that sphere that you just touched on. I'll just ask my other regulators, were there any other questions perhaps directed only to you, which I can't see, that just like Paul, you wanted to just highlight?
None for me in Apra. Okay. I think I've lost the ability to do video, sorry. Okay,
thanks, Stephen. I think Apra's got off lightly today, so I think we'll wrap up there today. I want to thank all of you who have attended today, and I know we got well over 125 at some point, so a good turn up, so I appreciate that, and hopefully today was useful. If you want to provide us any feedback, again, you could do that via the ASIC Innovation Hub page if you wanted to our dedicated email address. I wanted to thank all our presenters today, Paul, Kat, Stephen and Nick and Cathie. Really appreciate you all being available and taking your time out for this and being prepared to take questions. That's great. And I want to thank all our colleagues who have assisted this event being put on today. So with that, I think we'll wrap up and wish you all the very best for the rest of the day and good health to all of you in the period ahead. Thank you and bye.
Thank you for having us.
Thank you.
Bye.
Bye-bye.